Okay, so wanted to just cover something really quickly about relative strength and kind of what we saw over the last market pullback. So what I've got here is two examples, Rocket Lab and Spy, and we'll cycle through some other ones as well. But I wanted to cover a couple of quick notes. I think a lot of people miss when they're looking for stocks to buy when the market's pulling back, and kind of how they could pigeonhole themselves into maybe seeing a chart in a way that is misrepresentative of what's actually going on. So, what you can see here with Rocket Lab up at the top is you've got you've got a consolidation above the all-time high, and I've matched up some points on the chart here so you can kind of see what's going on with the broad market underneath and then Rocket Lab up above. So what you'll notice is where Rocket Lab peaked, you had a brief period of SPY outperformance shortly thereafter. And I think that's totally fine and justified after the 100% move in just a few sessions. So that kind of quick correction makes sense as far as relative weakness to the market there. But then what you see throughout the consolidation is perfectly telling in why I want to own names like this versus other names that are more closely tracking to SPY. And that's represented perfectly with these yellow highlights here. So what you can see is at these points of correlation, where SPY falls off here, you have Rocket Lab falling off as well. And I think a lot of people would view this as, oh, it's trading with the market, it's following the market. And I would generally agree with that, but it's notable of where it's going to. SPY is falling off from its consolidation to a new low. It's putting in a new low here, or kind of a first low in a pullback, whereas Rocket Lab is just pulling back to a support that already existed. Okay, now where it's really shown and when it's getting interesting is really on the second and third drawdowns on the broad market. So you can see at the second drawdown here, you have SPY pulling down and actually making a lower low. Really, you could call that a double bottom, but it does make a lower low. Whereas Rocket Lab is making a notable higher low. Okay, it put in that first low at 22, and the next one at almost 24, so almost like 8.5% higher. Okay, and then by the third one is when it's really apparent, where you have SPY putting in a much lower low beneath that double bottom, but Rock Lab putting in an equal low. And now, if you look at this from a compartmentalized perspective, you're going to look at this and say, "Oh, Rock Lab's down 20% in the last week. It's trading with the market." And that can kind of get you into a weird mindset where you're just like, I don't want to own this name because it's trading with the market. The market looks bad. But in reality, it's actually holding up significantly better. You can see relative to previous lows, it's actually making a double bottom or a consistent low here, whereas SPY is making a much lower low versus the previous kind of pullback spots. Okay, so after you throw on some moving averages, you can really kind of see how much better how much better Rocket Lab is reacting to the moving averages and price versus SPY. You can see SPY trading below the 50, below the 10, below the 20, whereas Rocket Lab, excuse me, whereas Rocket Lab does trade below the 10 and the 20, but those moving averages aren't turning down. They're really just flattening out. And then, just starting to turn down there. Whereas for SPY, throughout this consolidation, those moving averages have been turned down for weeks at that point already. So that's a little tidbit into relative strength about, how to view names that are still trading down with the market, but how to view them from that different perspective of, well, what's it looking like relative to previous price action and what's SPY doing at the same time. And I've got another good example here, and this is one from actually quite some time ago, but it perfectly displays, kind of what we're talking about here. So, if we go ahead and look at Crocs back in 2022, this was a tremendous long. So not only is Crocs a pretty solid business, but technically it has periods where it trades really well. If we go back and we look at SPY throughout the same period of time, back in back around summer of 22. Okay, take note of this here. Let's actually get these moving averages off once more. Okay. So you can see here, you've got a June low, which is right here, and then the October low, which is right here. Okay, well, if we look at Crocs up here, you've got your June low right here, and your October low, which is really technically like right in here. Okay, same spot. But note that Crocs is significantly higher than SPY at the same point in time. So while yes, you have Crocs, selling off through this period of time, and in this period of time with the market, you have it making a significantly higher low. So if you compartmentalize this and only look at it on, like the 5 day, 5 minute or something like that, you might be like, oh yeah, everything's selling off. That's your view because you've kind of pigeonholed or keyholed yourself. You're like, everything's selling off. But when you look at it from a step back, you recognize that relative strength is appearing very obviously, and and actually quite even more significant than Rocket Lab. Between these two lows, SPY puts in a lower one by 4%, and Crocs is 41% making a higher low. So that is then realized very quickly in kind of the run out from there. So you can see from that double bottom spot, does SPY continue to go upwards? Yes, it does grind higher, but you can see the relative strength in Crocs is tremendous. I mean, making a 100% move rather quickly while SPY just kind of slowly grinds up. Was at the bottom for SPY? Yes, but you can see that because the highs were lower on Crocs, it makes it a much more advantageous trade because you could see that relative strength. Even though if you were to look at it from a very small time frame, you might not recognize that, and you might see it as, oh, the whole market's selling off. So when you're looking for names to trade through something like this, it's important not only to view the short term outlook of the trade and what's going on that specific day or that specific week, since I know many of us place entries on the 5 minute, but it's also important just to recognize the higher low or lower high structure that could be playing out over those larger time frames. You could see something very similar with VST here. Okay, if we go ahead and take a look at this, you can see at similar points, you have some disconnect up in here where SPY again grinds a little bit higher while VST tapers off. But then the low structure is very important to recognize. You can see that, you've got your low put in here just like this one, then a higher low put in here around, this one down here, early January. And then that third lower low, you could see, I mean, look at these long wicks to the downside, much higher low and pressing against all-time highs while SPY trades down. These are your opportune entries during periods of broad market pullback, okay? Regardless of what you see on the timeline about bear this and bear that and whatever, this market has been getting bought up for almost 2 years now, just straight up getting bought every time. So it's important, at least for me in my system, to recognize that, hey, this could be it. This could be the top. The market could roll over. We don't know. But I'm not going to give up on a system that it has been working. I mean, I showed you an example from 2022, the actual bottom, where buying into those relative strength names, if you can manage tight risk, like something like this, you buy it over, maybe you just buy it over the all-time high and set the stop a couple of percentage points below. Even if you were to just buy it here, you'd still be able to maintain that trade no problem while the market sells off and it makes higher lows and then continues higher. So if you can manage tight risk and buy stocks that are making higher lows while the broad market makes lower lows, you're going to put yourself in a position where when everybody else is trying to fumble to get in and waiting for pullbacks on stocks, you're already well in, right? I entered VST at 154 in this pullback down in here. Okay. Now, obviously, I wish I'd gotten this undercut and rally through 143, but even then, the broad market was still selling off and it was holding sideways. That was a great opportunity with tight risk. Okay. So, yeah, it's important to think about not only relative strength on that specific day that you might be looking to get into something, but also kind of the broader structure of the market and where those higher lows and lower lows are. And then you can identify what's really showing relative strength and what might just be showing relative strength for a single day. Okay? Hope that helps.